Hello, great to be here. My name is Jeremy Takle, and I'm the CEO and co-founder of Pennyworth. And a little bit about me, I left a career of 25 years at Barclays, where I spent most of that time building banks around the world. And for reasons perhaps that will become clear during my presentation, found that that was actually becoming increasingly difficult to do inside a large bank and needed to go and build something better. So Pennyworth is a group of individuals that have come together, having left careers at large banks, who have built banks together and are looking to create a better bank for busy people, for a digital bank for humans. And that's what we're trying to do with Pennyworth. Let me just use a couple of slides here to walk through. So as I said, we're trying to create a bank, a digital bank for humans, i.e. busy people predominantly. And we start from a problem that says that, look, it's actually quite difficult for most people to sort out their finances. Most people don't feel as though they're getting a lot out of their money. And the reason is that they actually have multiple problems they're trying to solve. So everyone's trying to sort of progress their life and do the important things. And to fund those things can be seen as increasingly difficult to achieve. Some of them are less important activities like funding holidays, etc., but still can be difficult to figure out what's the best way to fund them. But really important activities like buying a house and having a future retirement income, both important but also very, very difficult to achieve. And actually, what you understand is that personal finance is a multi-problem space. It is not a single problem, and so approaching it as a set of problems is perhaps the best way to think about personal finance. And so what we particularly are interested in are this 80-20 rule, that actually the most profitable customers inside retail banking have unmet needs. And we tend to focus in on this mass affluent group, which we define as people with incomes over 40,000 or liquid savings over 40,000, who represent about 20% of retail customers. Because they're retail, i.e. they don't have very high incomes or very high liquid savings, they tend to not be customers that private banks and IFAs and others are very interested in. But they generate about 80% of the retail banking revenue pool. And so they're incredibly important, even though they have complex needs. They get basically the same experience and products as most retail customers, yet they have very clear unserved needs. When you talk to this customer group as a whole, you'll see they all want to get more out of their money. They're willing to make a change in their finances, but they're typically either too busy or just unsure about what change they should be making. And so it's a very interesting start point to say, look, we're looking at these problems that all customers face, and we're particularly focused in on this customer group that essentially drive most of the retail banking revenue, yet get probably the least favorable deal. And the reason they do that to some degree from their existing bank is sort of structural. Traditional banks are industrial legacies. If you look at the history of most of the mainstream banks, they are 200-300 years old. They began as in the 19th century as joint stock banks, often building large branch networks, either organically or through partnership acquisition, and today still have huge physical distribution. In the 20th century, as they moved from sort of general ledgers and each branches into computerization, they had to invest heavily in big technology platforms. And the result that you see today are banks that are burdened with this this high cost and have a model essentially of centralized production of banking and physical distribution that is local, and that means though that they cannot afford to deliver great value, and it's a very impersonal service that they generate, and so essentially they're unable to really deal with this retail customer group that we've focused on. So what do you do? So where do these consumers look? Well, I mean, first and foremost, when we look at what the neobanks have tried to do, we realize that they're sort of battling to win these customers' current accounts is definitely not the answer. This is current account switching for the last 12 months. It's less than 2%. It's on average been about 2% per annum when you look at the current account switching service. And it's really true that there's a huge inertia, which the banks can largely exploit, which means that most users will not shift their salary mandate and direct debits away from their current account. It's a very small proportion that do it every year. And so it's a very tough thing to try to break the inertia. But that's what a lot of the neobanks have tried to do. They've essentially sought to win the current account by providing a better experience, but not a large value difference. And what they end up with, therefore, as neobanks, is a large number of essentially loss-making customers who are using their accounts essentially as prepaid cards, as just expenditure cards, but not switching their main banking. And so they are unable to provide the typical services that would justify the current account, i.e. overdraft and savings and other products that sit around the current account. And so they end up with a huge amount of loss-making business, and only a fraction of their customers have actually switched their main banking. So battling for the current account is not the answer to this problem. It's not the way into these customers who are looking for better value. So what is the solution? Well, we believe the solution for us is Pennyworth. So our solution recognizes that we need to work with the inertia and help people who are busy, who are not looking to shift a lot of their banking, to really figure out how best and to help them figure out how best to fund the important things in life in the least effortful way possible. And so what we are aiming for are creating a bank for busy people, as we call it. And what does that look like? Well, it starts off with what we call made-to-measure banking. So it starts with us looking holistically at the customer. Remember, the customer has a number of problems they're trying to solve at the same time across their financial life, and actually splitting it into just the banking elements and the wealth elements doesn't quite make sense. So you're trying to actually look holistically at the customer, and starting off with trying to be as personalized as possible. What we mean by that is looking across the entire financial life of the consumer, using things like open banking to provide the most relevant recommendations to help them achieve the things they're trying to achieve in their life. And in so doing, then providing them with the best ways to fund that life with really competitive savings, loans, investments. And we believe that we should always be trying to deliver top quartile price products for these customers. And if we can't deliver that from Pennyworth, we will curate that from other providers to help people achieve their goals faster than they otherwise might have done. And essentially that then takes them into a realm where the main banks really can't compare or compete. And then finally, do so effortlessly. I mean, it should be such that you should be able to have the peace of mind of that your finances are on track. And if you're ever in doubt, it should be just a click away to be able to speak to your relationship team to answer any questions or to deal with any unusual activity, etc. So that's our view of what banking for busy people looks like. It's made to measure. It's a digital experience for humans. And what that does then is it creates a whole different type of unit economics, both from what the traditional banks have been able to hold on to, and also what the neobanks have tried to experience, which is first and foremost low cost customer acquisition. Customers are willing to go out and shop digitally, and therefore you should be able to acquire both deposit and loan customers. So both sides of your balance sheet, acquire customers low cost. And we have proven before that it's possible to build large balance sheets by acquiring customers directly through affiliate aggregators. But the cost of acquisition, the customer acquisition cost should be lower than the lifetime value of the product that you're then acquiring them onto. Indeed, ideally lower than the first year, so that you can break even every time you acquire a customer. You are putting them onto a product that is actually profitable for you. However, as we said earlier, these are products that are delivering great value to the customer, fine rates, so high yield deposits and low cost borrowing. But because of our low cost infrastructure, it's actually possible to maintain and sustain a product that's delivered at a great price and very competitively. And this is a function partly of exploiting the availability now of software as a service, essentially as cloud-based variable cost infrastructure, fintech as a service, essentially, that is available and only retaining inside the organization the really critical differentiating technical capabilities. So the front-end user experience, the recommendation and decision engines that you're using to surface offers to your customer, next best actions to your customer. And what that then results in is when you then build up multi-product relationships of underlying profitable customers. So on average, perhaps you have 1, 2, 3 products per customer, and now not only is your single product relationship profitable, but also now you have much greater lifetime value from that customer over time. So it's a radically different business model from what you're seeing from the neobanks, who are incurring huge cost of acquisition onto loss-making products, and then hoping at some point to essentially rebundle some sort of revenue generating activity on top of that. This is very much delivering great value to consumers through very well proven acquisition channels at very low cost and fine margins, but delivering then great lifetime value, essentially working with the inertia and giving no reason for users then to look for value elsewhere. And part of that underlying structure of low cost also means you're running a much more dynamic business. And one of the criticisms that we had around working inside a large organization and the difficulty to build new digital banks. So my team and I were largely responsible for leading the digital bank build in the US for Barclays. And there we were still operating within a structural silo set, which made it incredibly difficult to innovate and build and create cross-functional teams. And so the banks that you build today are very different from that. The banks that you must be, but not only working on variable cost scalable technology, but also organized in a very adaptive way. And so we envisage a business which is built much more like the ways that fintechs are built today. A network of interdisciplinary and empowered teams operating inside the organization, interdisciplinary in the sense that we're customer led, and each product owner that is owning a particular part of the problem space has end-to-end accountability for how do they solve that the best problem, how do they solve the problem for the user in the best way, whereas management leadership is really focused on mission control, about how do we enable and activate the teams. And what this is then is you have this network within a sort of people-centered culture, and you have a system that is that you're able to adapt and scale quickly in response to problems. And that's really sort of panned out now then in terms of how this structure works well in changing environments that we've as like those we've recently seen. And I'd like to finish up sort of a little bit on why now, why this structure. Well, first and foremost, we've seen the shift that consumers are much more open to digital banking options now, and are very comfortable putting a lot of their banking online. At the same time, we've seen new adaptive both technology and operating models. And so the technology in terms of operating from the cloud and operating models that are adaptive and scalable very, very quickly. And then finally, no one is yet appealing holistically to the mass affluent needs. And there are a lot of point solutions, and the incumbent solutions, which perhaps are more end-to-end, are very broken and poor value. Now, what's happened during COVID is these things have only been accelerated. So digital adoption has clearly accelerated during COVID into more than just banking, but banking adoption now has really spread way into a lot more of the later age groups. And so it's become much more the norm that you will do your banking online, and therefore the choices that are now available to you in terms of how you do banking have suddenly increased. We've also seen research during 2020 verified this. There was a lot of research from sort of places like McKinsey and BCG that verified that actually those people that had embraced agile models adapted better. They were better performers during COVID and adapted much faster. And you can imagine that that's largely to do with both the technology set, but also the ability to have interdisciplinary teams solving problems, but also being able to work independently without the need to be plugged into the mothership. And then finally, these needs that everyone has have only been heightened during COVID. I mean, there is a heightened need now to reassess your goals and reassess your finances post-COVID for many different reasons. But it's been an inflection point for many people now to figure out what do they want to do with life, and where should they go next. So this has only been increased and accelerated by COVID. So I'll finish here, and very happy to take some questions through the chat. And if you're, we've spent the last 12 months and now at the end of our pre-application phase for a UK banking license. We hope to be able to move forward with that very, very shortly. We've also launched our beta app, which is a goals-based planning technology. And if you'd like to test that out, you can register and download that at pennyworthfinancial.com. Otherwise, feel free to also get in touch directly. Thanks very much for listening. It was great to chat to you today. Happy to take questions on chat after. Thank you.